All right, everyone, here we are with ticker symbol HYLN, Hyliion Holdings Corp, or if you want to pronounce it as Hyliion Holdings Corp, also known as SHLL, Tortoise acquisition before the merger. So let's jump into this chart. So there has been a bearish run for some time since October 1st, since the beginning of the month, and here we are falling for 7 days straight, and now on the 8th, there has been a slight recovery, but the bulls were not able to maintain themselves above resistance or even break through the 50-day moving average. That means that the bulls are quickly losing control here again, and this could start to test newer lows. So very important to keep that in mind and pay close attention to this stock for the next coming days and weeks. This is a good sign that there was some momentum, but the bulls need to break through resistance levels to maintain the momentum and reach newer highs, as well as break through the 50-day moving average so that they can go ahead and reach new resistance levels and get back into bullish territory. So let's go ahead and zoom in here and see what's important for tomorrow. The first thing is the 50-day moving average is 31.48. I'd write that down. I can't land right exactly on it. It keeps jumping around, but 31.48 is a very important number. Once that gets crossed, we're back in bullish territory and the bulls can start to work their way up to newer highs, obviously trying to reach their next resistance level, which we're going to go into in just a second. Now, the bulls are going to want to break through 50-day moving average to get back into bullish territory. As long as we stay below it, which we slightly are, the bears are in control. And this is a lot closer to the support level where the bears can actually cross and get further away from it than we are from the resistance level. There's obviously a resistance level here in this tight squeeze here of a sideways direction of 32.21. I'd write that down because if the 50-day moving average does get crossed and then 32.21 does get crossed, that is a sign and it gives us a sense of direction as investors of where this is heading, but it does not confirm that this could hit newer highs and newer resistance levels, because the most important resistance level is up here at 34.12. That's the highest point in the day reached, and that's the one number that the bulls are going to want to break through, turn into a support, and further away from it as much as possible to move further away from the 50-day moving average in an upward direction. So once 34.12 does turn into a support, they can break through new resistance levels and newer highs. Now again, down here at 32.21, that can give you a sense of direction of where this is going and what is going on with this chart. On the other hand, we have what the bears want. Obviously, we're right now in bearish territory, so the tug of war is going to be super interesting tomorrow because there was a slight recovery here and momentum from the bulls, and if they continue from this point forward, they can get back into bullish territory, moving themselves up. But if the bears honestly reappeared here and are starting to dominate this chart as we're already in bearish territory, they're going to try to break through support and hit newer lows and newer support levels. And the first one they're going to break through, which is our support level currently, is $30.83. If that gets broken through, this could start to see newer lows and newer support levels. I want to emphasize how important it is to pay close attention to that because we're very close to it, and it will bring us further into bearish territory away from the 50-day moving average in a downward direction. So 30.83, I'd keep a very close eye on how the stock is behaving and what is going on with the chart at that time, and how quickly is this moving to newer lows, or is it hanging out sideways for the bulls to reappear and bring this one back up. If you learned something new, please do so and subscribe. Don't forget to hit the bell. By clicking on it, you can go ahead and turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button and let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, There are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.